So here's the magic of the price, here's the magic of the price and Fibonacci. Lovely, lovely trade on S&P from 1954.75 came to reversal zone and starts finding buyers. As my bias remained completely bullish when it comes to my hourly charts, we've been only buying S&P. But since there is nothing else to do but to be in corrective counter trend structure, I've taken 2 aggressive trades. Guess what happened? Oh no, we've been stuck in a trade on oil for the last 40 minutes. Know your levels. Oil also reached reversal zone 2. So what happens next at these levels will determine what happens with these reversal zones as we're seeing buyers picking up this steam. That's the difference between being follower and being knowledgeable, educated, conservative trader. So when my students report to me that he achieved 28 points on S&P this morning on 9 contracts, that's quite lovely. That's conservative, because S&P spelled out this morning only buy. Third trade on S&P, but currently it's pretty aggressive trade, because there is no conservative trade here. So shall I take conservative trade back up? Maybe. Why not? As I know extremely important level, reversal zone, once again had been reached. But I also know that without rules, nothing is possible. So what price will do next is absolutely critical and will determine the rest of the day on S&P, as we're witnessing the fight between minor and major trend. Decision point 1 is the most important level in the market structure. It's the end of the bearish minor trend. We've been buying S&P for 2 long trades prior, conservative, solid. This was aggressive trade. I said when price comes to reversal zone and rules are met, monitor for longs. The same thing happening on oil. We are out. My trade came to reversal zone and found powerful buying pressure. I'm out of oil. Reversal zone had been reached. So let's update our results, as once again, everything I do for demonstration purposes only. Here's another trade on S&P, trade number 44. Correct? 37 trades reached our targets, correct? Out of those 37 trades, the importance of decision point 2, I keep emphasizing to my beautiful students, never ever to be ignored. And once again, 32 trades made to reversal zone or further out. And here is another trade on oil. 44, 37, 37, 35, and 33 trades made to reversal zone or further. Make sense? So again, I trade multiple time frames, all the stops and targets based on the time frame I trade. I trade time frames from 5 range on S&P to hourly, 45 minute, 15 minute, 8 minute, whatever I trade. I discuss everything with my students. And once again, our pretty super duper aggressive trade on S&P, what it will do next will determine the rest of the days again. This is the end of the minor trend on hourly. We're monitoring the reversal zone. Another 5 points later, actually almost 6. And that's the magic of the price and Fibonacci. Pure price for entry and Fibonacci for exits, confirming nothing in this world is random. So, just to recap, if you were buying gold at 1200 as 1200 identified, excellent buying opportunity based on AlphaWaveTrader method. Once again, know where the end of the minor trend is. The same level where we've been buying S&P from is the same level where gold daily collapsed from. Once again, do not ever forget what's happening on Euro daily. This is the most spectacular bullish formation we had seen, with buying opportunity from 25.50. But Euro was not able to get out of reversal zone. Will it succeed next time around? Just know your levels, know where to take price targets of the table. Another example. It don't matter if it's Euro daily. It don't matter if it's gold daily. It don't matter if it's extremely small time frame on S&P that is completely stuck in reversal zone. Formula remains the same. Just like gold collapsed from the end of the Minod Trend, will S&P find buyers once again, or will this time bearish trend will become major trend? Just know one rule. Do not ever take speculative random entries. Do not ever use delayed silly indicators. Do not ever acquire position into the end of the Minod Trend. You will get in trouble each and every time. This is the most powerful and the most critical level in the market structure. And that's why this morning our bias remained buy S&P. That's why when I took the short, I said it's pretty darn aggressive. That's one why I said this morning buy oil. If I'm shorting oil, it's pretty aggressive. Because when we stuck in trading room in counter trend structure, I will do so, as price does not care about trading room hours. And that's the power of the price, and that's the power of the method I developed and the method I teach. I'm extremely proud of what I developed, and every single Fibonacci level is AlphaWaveTrader proprietary level. That's why oil continues with spectacular rally, reached from my proprietary Fibonacci levels. Fibonacci tool is free on any platform. If you know this level, you can be like Randy trading on MT4. If you know this, you can be like Liz trading on TradeStation. If you know this, you could be like Sheree trading on Thinkorswim. Formula remains the same. You're in charge of your account, your decisions, what time frame you trade. Without rules, nothing is possible in trading. And if you know where reversal zone is, you would know where to take profits of the table. So, S&P remains stuck 6 points later at reversal zone. Will buyers step in here with vengeance remains the key. Let's see what S&P do next. Oh no, how predictable is price. How did we know that buyers will stop stepping in because price spelled out where reversal zone will be? Once again, it is hourly end of Minod Trend, correct? So, maybe I will take trade number 4 on S&P, but maybe not. It depends on volatility. Only if discussions with my students will allow me time to bring it to the visitors. Alphys, let's talk. Reversal zone on S&P on full display, as expected. As expected. 6 points later. We're witnessing the importance of reversal zone and very powerful rally as expected on S&P, as we knew it will play out when we took a trade, because once again S&P reached reversal zone on our trade, correct? And once again S&P reached the end of the Minod Trend, so this is the conservative structure. Magnificent, beautiful and spectacular and painless. If you know the rules, the sky's the limit. This is a dense price continue repeating each and every time. Your price for entry and Fibonacci for exits. You can trade any instrument and any time frame. We are out of S&P short, out of S&P short. Clear? The same thing you witnessed on oil has happened on S&P. Just to recap, we had taken 3 trades this morning on S&P. 2 long, painless, solid, beautiful structure, and 1 aggressive short. Our students had 3 other long trades. As you witnessed, my short trade came to reversal zone, and here's buyers picking up this team. Again, you have to be extremely critical where S&P is currently, as S&P at very, very important level. So, oil had done a very much similar thing, except oil collapsed drastically lower. We had done 3 trades on oil as well. As I spelled out, bias is long, long, long. So the short I had taken on oil up to 40 minutes later made it to reversal zone and found buyers as expected. So that's the difference between remaining conservative and aggressive. When we confine to trading room hours and I'm stuck in counter trend structure for an hour, I will take aggressive trade. That's simple. So have a marvelous afternoon. We're off to education. Look forward to seeing you tomorrow.